Hey everyone, I've been getting a lot of TikTok video requests to do more chart analysis, technical analysis kind of stuff. So here it goes. Now, because of coronavirus, I don't know the date today. I don't know when in November we are, but I will tell you that we are not in November 5th or on November 5th. I took this screenshot on November 5th because the chart looked interesting to me. And I thought I'm going to wait and I'm going to do the video later because I want to teach you guys how to trade. I don't want you just seeing this video and going, well, he said the chart looked good, because then nobody learns. And the whole point of my channel here is that you guys learn and understand what to do without just hearing it from a stranger and then just jumping in. And then, I don't know, maybe you buy this stock based on a video that I did, not a recommendation because I'm not a licensed trade financial advisor or broker, but just on this educational video that I've done, maybe you run off and buy it and then you get hurt because you don't have an entry, you don't have an exit. I always talk about the importance of those two things, and you don't have a plan when to take your profit or when to take your loss, or how much profit you would like, or how much of a loss you're willing to tolerate. So I want to walk you through two examples, two trading scenarios here. Scenario number one is we're looking for a swing trade. So I want to do that one first. Swing trade, by the way, is any position that you plan on holding for more than a day. It can be a couple days, it can be a couple weeks, it could even be a few months. Anything over that, and I would just say it's an investment, right? Especially if it's over a year. If you're holding the stock for over a year, you pay long-term capital gains versus short-term capital gains, which can be a little bit more. All right, so this is Wednesday, and this is Thursday. And at the open on Wednesday, we see that this stock kind of rallies pretty strong. It just keeps moving. My gut tells me I'm not seeing any breakouts, right? I'm seeing breakouts on the actual chart, but I'm not seeing any arrows. The arrows mean that we have, especially because this is a 5-minute chart, as you can see up here on this little pull down tab, it's a 5-minute chart. I like the 5-minute charts because it gives us the big picture of, oops, sorry, I hit the microphone. It gives us the big picture of what's happening over a sustained period of time. We don't want to look at a 1-minute chart because there could be a huge pouring in of orders, and it's not a sustained rally. It maybe is just one hedge fund or one, algorithm or one technical trade, computer trade, that just comes in and drives the stock price up, but it's short-lived. There's not a sustained rally and the stock crashes. What we want to see is sustained momentum, which is why I'm guessing we're not seeing any breakouts here, although I'm not 100%. Now, this is resistance, this top line here, this red line. These are the Bollinger Bands. This guy right here is the top of the band. It is the resistance band. In other words, it's saying the stock isn't going to get over this price. And this middle line right here is the 20-day moving average, and it's really more of a psychological moving average that indicates that the stock is heading one way or another, and you want to start paying attention. We'll get into that a little later. Bottom band is support. In other words, the stock is being supported at this level and it won't go below. Of course, when it does go above or below, we've got ourselves a breakout. That's a buying indicator. It's not a guarantee that the stock is going to go up, as we can often see there are multiple breakouts here and there that never really pan out anywhere. That's why I like to wait for multiple breakouts, multiple arrows pointing to the upside, and I like it on a 5-minute chart because it shows us that there's a sustained continuing rally. The other thing we want to do is we want to come down here and we want to look at the volume. Now you can see what happens if there goes my calculator. If we see this one little surge of volume, but we don't see sustained volume, in fact, we see the volume starting to taper off, that's an indicator to me that this stock maybe is running out of steam. So this is Wednesday, I don't know if I said that already, and this is Thursday. Right here at the open, the stock starts moving. There's some volume, and then there's this one big surge when the stock starts to fall. So it breaks out to the upside, but it's not a sustained breakout. And you see what happens, it starts to drop. So if I'm looking to get in on a swing trade, I'm waiting for it to hit bottom. How do you know when it hits bottom? You have to wait for the indicators to tell you that they have. So the first thing we look for is, oh, it's breaking out to the upside. I know I wanted a swing trade here, but I also wouldn't be opposed to selling it as a day trade if I can get in and it has a really big rally and I can get up 20 cents right? If you're putting in a thousand shares and it goes up 20 cents, you've made $200. What do you make at your retail job? What do you make in minimum wage? What do you make in your office? That's the goal here, is to, you always hear people say, I want to be a trader because I want to be rich. They want to be rich, right? I'm going to give up my 9 to 5 job only if I can be a successful millionaire trader. But for me, the goal isn't necessarily to be rich, although that would be nice. The goal is to replicate and maybe sometimes do a little bit better than what I would working out there for a boss, having meetings, micromanagers, teams, phone calls, emails, all that stuff, commute, suits and ties. No. So for me, my goal is around $200 per trade. Sometimes I make several trades in a day. Sometimes I only make one. I try to replicate what I would be making out there. So if I can see that this stock is having a quick breakout or a quick rally in the morning, and there's sustained breakouts, it's a sustained volume, I can see that there's sustained volume, maybe I'll hop in. What I'm looking at right now, though, and let's keep in mind that even though I've got the screenshot and we can see everything that's happening, let's try to be in real time here. Like, let's try to look moment by moment and not just scan over and look at the whole big picture, because keeping in mind, you're going to be doing this in real time. This is 9:30 in the morning. You're watching each one of these bars fill every 5 minutes. You're waiting to see what the stock is doing. So real time, I'm seeing the stock have a run up, but I'm also seeing the volume kind of lagging. I'm also seeing that right into the open, it's already saying that it's overbought and could pull back. So changing course here. I'm not going to day trade this stock unless something changes. I'm really going to be looking to make an entry point for a swing trade. So I'm waiting now for it to hit bottom as I'm watching the stock kind of taper off. First thing we notice is it crosses below this 20-day moving average. When it crosses below this 20-day moving average, it indicates that it could be potentially reversing course. Next thing we wait for is a breakout to the downside. And we get one right here. But it's not huge, right? There's not a lot of volume. There's not a lot of selling. And it doesn't really seem to hold. In fact, it kind of reverses course. A lot of people think day trading is very exciting, very interesting, but keep in mind that this is over the course of several hours now. This isn't happening in 2 or 3 minutes. This is happening over several hours that you're sitting and watching and waiting. You're bored. You're just like watching the screen. You're on Facebook. You're on TikTok on your phone. You're waiting for it to do something. So in real time, we're watching it and going, oh, here goes. It crosses the 20-day. Here goes. Now maybe it's going to sell off. Oh, it breaks out to the downside. And then a couple minutes later, oh, wait, it's reversing course. It's moving higher now. Oh, now it's crossed back over the 20-day moving average. Maybe it's a buying opportunity here. If we can get a breakout to the upside, we can get a rally. Although I'm, again, looking down here, and I'm seeing that there isn't very much volume. So we continue to wait. Now it starts to reverse course again, and it's dropping, it's dropping, it's dropping. And what do we start to notice? Couple breakouts to the downside, and then we get this one right here with the arrow. The breakout to the downside, it actually happens, and you can see volume, that's these blue lines here, really starts to pick up. Now, right into the close, right around 4 or 4:30, or I'm sorry, right around 3 or 3:30, that's finally when the stock starts to move for me. Now I'm waiting to get in. I don't want to be overly eager, right? I don't want to say, oh, it's going to break out. I have a feeling it's going to go lower. But I'm not sure I'm going to get in here. Or, oh, it's reversing course. I'm going to buy here because I expect it. You want all of the indicators to kind of sync together and work as one to really back up and back up and back up again your feeling here. You don't want to just be impulsive and go, oh, I think it's turning around here because you want it to. So we're watching it sell off. We're watching it sell off pretty big. But I'm waiting for it to get into oversold territory. And that is right here. This is the relative strength index right down here. And the way the relative strength works, and by the way, I've got more videos on relative strength Bollinger Bands elsewhere on my YouTube channel. So if you want to go more in depth, I'll link them below. But what we're waiting for is it to cross this line right here. This is the 30 line. This 30 line indicates that there is a lot of selling and there is a potential for a recovery or turnaround, a little afternoon rally, a little surge. So I'm waiting until it gets right under this line. And even though it crosses this line, It's not a guarantee that immediately after it crosses, it's going to shoot right back up. Sometimes it is, sometimes it isn't. You could buy right when it crosses only to find the stock going a little bit lower. This is why it's important to have a stop loss, or at least a mental stop loss if you're actively sitting at your screen to say, all right, I'm in at, let's say, around $4.50. What am I willing to lose? I always go with the 1,000 shares just because it keeps the math way easy. So we're in at $4,500. Every 10 cents is 100 bucks. Okay. So how much am I willing to lose on this trade? Understanding and knowing that stocks need to pull back a little bit to allow buyers to come in. Maybe people have put in buy. Maybe people have put in buy orders. Maybe people have said a couple days ago, hey, if this stock gets back down to around 450, trigger my order. Maybe the algorithms and the computers are saying, hey, when there's a precipitous drop in the stock price and it triggers this oversold territory, we all go in. There's a lot of factors here at play. We don't want to get in early, right? We don't want to say, oh, it's getting close, so I'm going to jump the gun. I'm going to get in before, or it crosses right away and we jump in a little early when there might be, in fact, more selling to go on. So it's also important to be paying attention to the news, which, since this is a screenshot, I can't turn it on right now. But if you are on Ameritrade's Thinkorswim, you do have this Trader TV with CNBC on. You can put on the news. You can tune out a lot of their BS. But it's always good to have the news kind of on in the background, even if you're not a big fan of CNBC or you don't like the mainstream scary news, because they do inform you of what's moving the markets, right? So maybe the Fed is speaking, maybe the jobs report is coming out, maybe there's a spike in COVID surge in cases and the markets are pulling back, or maybe a mayor in the big city is saying we might have a second shutdown. It's always important to pay attention to the individual companies' sector news, right? You always want to be looking at the individual company's news to see if there's a reason for the sell-off. Maybe just because it crosses oversold doesn't really mean anything if the news is really bad. You always want to have on the broader economic news. They can tell you, hey, markets are in real turmoil right now. Even though it crosses this oversold, maybe it's not the right time to buy, as there could be more panic selling. So there's a lot to consider. But in the case that, let's say, it's just a kind of quiet day and the stock has been kind of selling off all afternoon, you're looking for an entry point to make a swing trade, finally you get it. Right here, the stock hits around 444. Now, for the sake of this video, I always hate when people do these videos and they say, well, this was the low and this was the high, so I bought it here and I sold it there. Come on, that's not realistic. When you're watching in real time, you don't know when the bottom, genuine 100% is the bottom. You have a hunch right here because of the relative strength, but you don't know with any sort of real certainty that $4.50 is the bottom, or $4.47 or $4.40 or $4.44. You don't really know. So the way that I like to do it is I just go off of this. Okay, it's oversold. I'm getting in. I've got my stop loss. For me, it's around 4%. For you, it might be a dollar amount. I don't want to lose more than $100. I don't want to lose more than 20 cents. I don't want to lose whatever the number or percentage you have, you know. As soon as you buy, the next thing you do is you just sit and you wait for it to do one of two things. Either it drops lower, you've got that price in your mind. I'm out at $4.34 because then you lose $100 if that's what you're comfortable losing. You wait for it to drop to $4.34, you sell, on to the next one. As long as it doesn't hit that target price, that sell order, you're in it. And look what happens. It starts to rebound, and it starts to rebound pretty significantly. Now, this is what I always talk about, the importance of having a strategy, a goal in mind. Keeping in mind that we are looking for a swing trade. We're looking to buy and hold the stock for an extended period of maybe days. What is your goal? Is your long-term goal $200? Is your long-term goal 20%? Is your long-term goal a certain price target on the stock? Oh, I want it to go to $7 and that's when I'll sell. You need to figure out your own strategy, your own goal. Mine, like I said, is to make $200 per trade. So 444 to 464, I hit my $200, I exit the trade. Sure enough, this stock starts to move pretty quickly, right? Immediately hits oversold and boom, starts to move back up. Now, I did say this was going to be a swing trade for me, but we're talking about the last half hour of the trading day, and you can see where it goes straight up to around 470. Now, if I'm sitting here in real time and I'm watching this, 470 minus 4, say, let's say I buy at 450. What do you know? 200 bucks on my 1,000 shares. Maybe I exit the trade, or maybe I say, looking at this stock big picture now that we have the whole day to look at, it sells off and it starts to rally into the close. Now, again, there's no guarantees here, but oftentimes as a stock sells off on one day and starts to rally into the close, it can be a sign that the stock will continue its momentum into the next day. So you now have a choice to make. You've hit your goal, but you were also looking to make a swing trade because you felt for whatever reason that the stock might push higher. Do you want to take your profit, or do you want to hold and see what happens the next day? You can always continue with your stop loss. You can always lock in your profits if it starts to drop the next day. You got options. So continuing, let's say now that you've decided, you know what, I'm going to swing trade the stock. I'm in at 450. I'm going to hold. I want to see where it goes. The stock is looking good. The chart is looking good. Your technical analysis is making you feel pretty confident about this trade. You decide, you know what, I'm going to hold it. I got some other trades that I'm working on. I'm going to hold on Luckin Coffee, and I'm going to wait and see what happens the next day. So here we are now, it's Thursday, and you can see right off the jump, there is a lot of volume, right? Especially in the first couple hours of the trading day. One thing you can keep in mind when you're new to this is as long as it's over this 20-day moving average and doesn't cross below, you don't really have an incentive to sell, right? Remember, when it crosses below this 20-day, it's an indication, not a guarantee, but an indication that it might be pulling back. It's one point of the two, right, where you can say, I'm out, I'm locking in my profits. Obviously, the second is the breakout to the downside when it crosses over the support line that's supporting the stock and preventing it from going lower. So if I was in this trade as a swing trade, I'm in at 450. I keep closing my calculator. I'm in at 450 from Wednesday. For me, I will trade when it crosses below this 20-day moving average. That is my point where I jump out. And here we go. It's around, what would you say, 470, let's just say 475 is where this kind of starts to dip off and sell off. So I'm in at 450. Let's say 475 minus 450. I'm up $250 in a day and a half, basically. And this is where I would personally choose to exit the trade. I've hit my goal. I've made a little bit more. If you don't want to do that, if you're willing to roll the dice, remember, you have all the way down here to break even. So another strategy for you is, I don't want to lose money now that I'm up so much. I'm not trying to lose money, but I wouldn't mind letting it pull back as far as it needs to pull back to its previous level of support and just seeing what happens. And if it crosses below 450, which is what in this scenario you bought it at, that's when you'll sell. You'll walk away, break even, no gain, no loss, but you gave it the room to pull back. It's a swing trade. You don't mind holding it for a couple days, couple weeks. So the other option for you is sell at around 450 and get out. The other option, again, is to wait for it to break out to the downside because you're expecting now that we're going to have a big sell-off coming. Your final option is to say, I'm not selling this stock until it gets into overbought territory because the momentum is so high. We can see it's got a straight, pretty much uptrend over the course of the whole day. Trades a little flat in the afternoon, breaks out a little bit like it's teasing a pullback, but it doesn't really go anywhere. Doesn't break out to the downside in a way that really causes us concern. And it immediately kind of starts to rebound, crosses back over the 20, and pushes way higher. So your next option as a swing trader is to say, I'm just going to wait till it hits oversold. Might be today, might be tomorrow, might be in a couple days. Might never get there today, right? You can see on Wednesday it never gets really anywhere except for the very beginning and very close. And for the most part on Thursday mostly afternoon, it never gets into oversold or overbought territory. It starts to pull back, but it never really gets below. we've got a lot going on here with this stock and this chart, which is why I took a screenshot of this particular one, because there's so many strategies, there's so many options. Option 1 is to just hit your goal and get out. Option 2 is to wait for it to break the 20. Option 3 is for it to break the support line. Option 4 is to hold until break even at your previous level of support, which is around 444, which is where you bought it at 450. Finally, option 5 is to just hold it and say, screw it, I'm not holding this stock, or I'm not selling the stock until it hits overbought territory. At which point it hits overbought territory right around, what would you say this is? 484, maybe 480s. This is where the breakout is, right here at 480. So we can do the math. It's up 30 cents ish, right? 450 to 480, so you've made $300. Or you can hold it up to $5. But again, the caution that I would have when looking at a chart like this is to think in the moment, right? Because we don't know what's going to happen throughout the day. Just because we're looking at the screenshot now, or screenshot, it's a lot easier hindsight to go, oh, well, obviously I buy at 444 and obviously I sell at 5. You don't know that's going to happen. Right here it crosses over oversold right at around $4.84 at the same time that we have this breakout right here. So there's two conflicting messages here. One is saying, dude, it's overbought. It's going to pull back here. The other is saying, no, it's going to go higher. So it's up to you as a trader who has a plan, who has an entry and exit, you have a goal, you knew what you wanted to make ahead of time. If you sell it around here and you lock in that $250 profit and then you check back later in the afternoon, hey man, you made money. The goal here is to make some of the money, right? I think the big mistake people and traders make is they want to make all of the money. I want to make all of the money. That's unrealistic. You know, it goes back to this point of $4.44 and $5. It's unrealistic to look hindsight and go, oh, well, obviously as a trader, I would have gotten in here and I would have gotten out here. You don't know that. So again, the goal is to make some of the money, not all of the money. I personally probably would have gotten out around here because that's where my goal is. Right? My goal is to make 200 per trade and I've made 250. So I'm already up. I'm already higher than I thought I would be. But you've got a lot of options here. It's up to you as a trader what your risk tolerance is. Do you feel like risking it? Right? Your goal was $200. Do you feel like risking it now that you've hit it? Are you going to be greedy and hold out for more? Of course, hindsight looking at this chart, yes, of course I'm going to be greedy and I'm going to wait. But just as easily as it keeps pushing higher, it could have crashed and sold off like it did here. And then you'd be sitting there going, fuck, I had 250 or I had 280 or I had 300 and I didn't take it. Oh man, and that's the problem that a lot of these traders get into is that they're new, they're greedy, they want all of the money, and they end up not having a plan, not having a strategy, waiting too long to get in or out of a position, and then it bites them. So that's just a quick, I don't know how long this video is going to turn out to be, but that's just a quick little video on a couple of scenarios here as a trader, when to get in for a swing trade, when to exit, and when to exit as a day trader as well. Oh wait, did we even go over the day trade? I don't think I did. All right, part 2 to this video is the day trading video. So let's say on Wednesday, we're watching the stock drop, we're looking for an entry point for a day trade. We've got option 1, which is to buy right here at oversold, sell it right into the rally, right? We have our goal is 200 bucks. We get in at 450, it shoots up to around 470. We're out in a half hour, great. We also, as a day trader, and by the way, a day trade is anything that you open and close the position in the same day. You don't hold overnight. Them's the rules, man. With day trading, you close out the position, win, lose, or draw at 4 o'clock, whether you're up or down or flat, you sell and you start over the next day. It's a way to minimize risk. But, you know, as long as you have your stop loss and your plans, that's one way to lessen the risk. Not meaning it's inevitable. Something could happen overnight. Stock could plummet, you know. Now, let's say you want to make a day trade on Thursday. When do you get in? You've got a couple of options here. Option number one is we're waiting for it again to get into oversold territory. Right at the open, it starts to push like it's going to head lower, but it doesn't go lower. In fact, it starts to turn around. As a day trader looking for a quick trade, this right here seems interesting to me. It sells off pretty sharp and then rises. As a very quick trade, you might consider getting in, although a lot of the times right in the early morning, there are fake outs to the upside and fake outs to the downside, where you think, oh, we're pushing higher, like this one, where you think, oh, right into the breakout, right into the open, I'm jumping in, I'm going to ride it up, I'm going to make a lot of money, and then it actually reverses course and drops. So if you are a quick trader who can look at the charts and say, all right, we're here at around 450, let's say I get in around 460, goes up around 10 cents, I make $100 in 10 minutes, I can always buy this stock back later in the afternoon. I'm going to keep watching, I'm going to keep looking for an indicator here to tell me to get back in. After you sell, right, you're in at 460, you're out at 470, you've made your $100 right in the first hour, half hour of the day. You're still watching this stock and you're looking for an opportunity either for it to get into oversold territory, overbought territory, so you can make a decision on what to do. And you see this right here. You see a breakout. For me, I like two breakouts. I like a continued rally. I don't get two breakouts here. I only get one. So the trader in real time is saying, okay, we've got one. Now I'm just going to wait, and I'm going to wait for a second breakout to happen. And it starts to sell off. And even though the volume isn't super significant, it's selling off, and it breaks out, it crosses the 20, and it breaks out to the downside. So as the trader, now what I'm doing is I see this right here, this breakout to the downside, and I go, oh, I'm stepping back. This right here is what I'm looking for. I'm waiting for it to get into oversold territory. And I'm looking at this chart right here in the middle, and I'm going, wow, we've got a ways to go. There's more selling that could happen. So again, I'm just sitting and waiting, sitting and waiting. Sure enough, though, it starts to rebound, and look what happens. We get another breakout. They're pretty far apart. That tells me it's not a back-to-back. You know, I like back-to-back breakouts where they happen boom, boom, because that tells me that there's a sustained rally in that moment. This is over the course of, I don't know, 2 or 3 hours where you get these two breakouts. So that's not good enough for me. I want them to be closer together. Or if I don't get the two breakouts back to back, I want to see big volume coming in. Big volume, and I'm going to make a very quick trade. So right here around 480, at this breakout right here, maybe I get in. Now what am I doing? I'm waiting for it to get into I'm waiting for it to get into overbought territory so I can jump out, lock in my gains. And what do you notice? I buy here, let's say I buy at 480. I'm already up $100 from this earlier trade from today. So all I need to do now is make another quick $100. That's 10 cents. I can get out. I can hit my goal of $200 on this trade. So I'm in at 480. I got my eyes on 490, which is right around here. And what do you notice? Right here, there's another breakout to the upside. So I'm in at 480. I'm out at 490. This is confirming it to me. It's overbought. There's going to be a sell-off coming. That is another option for you as a day trader to make multiple trades in the same day. And the great thing about Ameritrade, Robinhood, Webull, all these new brokerage accounts is that the trades are free now. It used to be $10 to buy and $10 to sell a long time ago when I first started trading. That's $20 just in fees to buy and sell. So if I'm doing 2 trades in a day, it's 20 here, buy and sell, and it's 20 here, buy and sell. So it's $40 in one day just in fees. So if I make $200, right, factoring in short-term capital gains and the fees, I'm not walking away with very much. So them doing away with the fees really helps out in a big way. You still have your capital gains stuff to worry about. Now you might say, well, why didn't you just sell it up here at 5? Well, like I've said 54,000 times in this video, we are looking at this chart in real time, pretending that we don't see what's happened or happening or will happen later. I have my goal. I keep talking about the goals because it's so important. I have my goal. This was a very quick trade. I wanted to get in and out very quick. I made $100. All I knew in my mind was I would like to make another $100 before this day wraps. Don't have to, but if it looks good, if it looks promising, I will. And it looks promising right here because we have a breakout to the upside and we have an increase in volume here. So I buy. And then we have another breakout, which tells me we've got a continued rally on our hands. I'm going to continue holding the stock. But I also am not going to hold it for too long because all I need to do is pull in that extra $100, hit my goal, walk away, all done. So we've covered it all. We've covered the day trade, we've covered the swing trade, and we've covered another day trading because I think I opened with day trading. So that is a little bit of a walkthrough on a chart. I'm going to be doing more videos like this if you thought it was helpful. If you have suggestions or comments, leave them below. Thanks for watching and have a good night.